Sam, have you seen polysilicon prices lately?
I have seen polysilicon prices lately. Now you mention it.
There's your answer.
So, I mean, like these are the knock-on effects that I think people don't really think about when these sorts of things happen. They see the headlines, fuel crisis, and they go out and panic buy and try and get fuel in their car.
If only they were panic buying BP shares. Is that what you're saying?
Well, welcome to the Exponential Investor Podcast. Want to be a better, smarter, more clued up investor? Well, you've come to the right place. We cover the breakthrough investment ideas you don't hear about in the mainstream to keep you on top of the megatrends and opportunities reshaping our world. Good morning, welcome to the Exponential Investor Podcast. I'm Sam Volkering, your editor, here with my co-editor Kit Winder. Thanks for joining me this week. Kit, we had a week off last week, just a little break in schedule, but here we are back again, and wow, what a week it's been. And we often discuss energy markets because that is an area of expertise that you have. And how could we not talk about this week? I mean, the energy fuel crisis, there's an energy crisis. We're running out of energy. We're running out of fuel. I think people are probably running out of sanity as well. What do you make of this? I think I've had a few questions about it, and I think people want to know, is this a one-off kind of thing? Is this abnormal? Or is this something that we might see more of and should probably come to expect as we head towards winter this year? What's your take on it all?
I mean, the consensus is certainly that it could be quite a difficult winter. I don't think it's that likely that we're going to see gas supply, massively ramp up this quickly to meet the sort of shortfall in supply that is causing this. The thing that I've found interesting in all this is the sort of politics between Europe and Russia and the Nord Stream 2 pipeline. It's quite interesting. I think it hasn't gotten nearly as much coverage as I would have thought, actually. The fact that Russia has plenty of gas supply that it's refusing to send to Europe until Europe authorises its new pipeline. And I just think it's so old school.
It is. It's a form of trade war, isn't it? I guess really, it's sort of holding one country to ransom when you've got something that they so desperately need. You could argue that China may be doing something similar with semiconductors and the entire rest of the world. A mate of mine actually. So over the weekend was my birthday, and went out for dinner, and we went out for lunch, and I was having a chat with a mate about, because obviously everyone was losing their mind over the petrol stations basically being closed.
Yeah, I was actually in a garage to buy snacks. But I overheard a conversation in which someone who worked there was telling a customer that someone had been in and tried to fill up a plastic bag with fuel.
Oh my God.
No jerry cans left. I'll fill a bag. Don't worry about it.
I don't even know what to say to that.
Neither do I. But it's a sign. It's a sign that people have lost it. Some people.
Yeah, like I said at the top, I think people are running out of sanity as well. I had a conversation with our friend and colleague Boaz Shoshan last week about it as well. And I earlier on when the first report started circulating that BP was struggling to get deliveries to their petrol stations, I actually added a couple of jerry cans to my Amazon basket, which I was reminded of on Monday was still in my basket, so I hadn't purchased them. But I think it was Halfords had said there was like a 1,600% increase in jerry cans sold over the weekend. I think it's not going to be a
Luckily,
fuel
I've
shortage.
already got one because I once run out of fuel.
Yeah,
common.
I'm going to be one of those people.
I've got the embarrassing background that is now potentially going to save me.
Yeah. I feel sorry for people that genuinely just have to fill up a jerry can. Like my mower's almost out of petrol, and I need to fill up a 5-litre jerry can. And I'm going to look like one of those people.
God, your lawn is going to be so overgrown. This is a disaster.
It's not great. It's not great. As many people have suggested to me, why don't you just get one of those handheld, hand-powered ones?
What, scissors?
Yeah, the rotary ones. Okay, yeah. But then I wouldn't get the lovely smell of freshly cut grass and two-stroke mixed together. Anyway, what I was saying was I had a conversation with a friend, and he's actually ordered a Jaguar I-Pace, the EV. And he's been waiting for his. So like he was a little bit smug about the fact that he's got an EV. But I said, well, have you got it yet? And he goes, well, no, not really. And I go, well, who's smug now? And he said he'd been waiting 4 months for it to be delivered, because they just can't meet their the production levels that they need to, because they can't get the semiconductors and the chips needed to actually get the cars off the lots and into people's hands. So it's like, it's not just a crisis, or we're just not, struggling with getting things like fuel and energy to people. We're struggling just getting basic, well, I say basic, but cars to people. And even this morning, I was reading about the fear perpetuating that we will be out of turkey and meat and trimmings this Christmas. Now
it's funny how that's the one that gets people, isn't it?
It's
fine in August, but if you do me out of my Christmas turkey, suddenly we've got a heck of a problem on our hands.
This country will fall to pieces if there is no turkey on the table at Christmas. But it got me thinking, right? So obviously we've seen in the last week companies on the stock market like Shell and BP have actually jumped a little bit on all of this sort of mayhem. And I'm wondering now if what other areas where we may see shortages is there opportunity to play the market? I even found myself looking at publicly listed food companies this morning, just trying to get a bit of a idea, because realistically, if at the start of last week when you started seeing reports about BP struggling to get fuel and the whole issue with the energy, a swift move into some of these players, and you would have quite comfortably seen 10% and then some in some of these stocks.
Sam, have you seen polysilicon prices lately?
I have seen polysilicon prices lately. Now you mention it.
There's your answer.
So I mean, like these are the knock-on effects that I think people don't really think about when these sorts of things happen. They see the headlines, fuel crisis, and they go out and panic buy and try and get fuel in their car.
If only they were panic buying BP shares. Is that what you're saying?
Well, they should have been, is what I'm trying to say. Tell people about the polysilicon issue, actually, because I think to most people that will be they'll be like, what? Sorry, what?
Yeah. Well, actually, I'd quite like to use this as a nice little entrance point to a larger point. So polysilicon comes mainly from China. It's the key ingredient that goes into making solar cells and panels, which are in high demand as after the pandemic. There's been a huge rush of commitments to net zero, pledges to build new solar farms is obviously a huge part of that. And so there's been a continuing growth of demand that's, been in place for a decade. But currently in China, where most of the polysilicon comes from, they're faced by multiple series of threats. Over the course of the year, there's been some sort of political tensions around, Xinjiang and the Uyghur situation and the potential use of any forced or unpaid labour in the supply chain of some companies in that region. So I think 4 companies, solar and polysilicon companies in Western China, were banned from exporting into America by the Americans. So that was the sort of first little tremor. But then the real issue this month, where polysilicon prices, I think, have risen from about, sort of 3 or 4-fold in about a month.
The chart just goes vertical.
The chart is amazing because it's pretty low volatility for a while, and then it goes due north. And that's primarily because of rising coal prices. So coal is a classic shortage. It's up 200% this year. China still relies on it sufficiently that the fact that there is a shortage means that they desperately need power. Their country is currently, this is what I want to get into, is China is having a serious power crisis, like more serious than I can't, no offense, but more serious than I can't mow my lawn. They are shutting down factories. They are rationing electricity. You can't use a lift below the first 3 floors of a building at the moment. Cranes and construction companies are only allowed to work 8 hours a day and things like that. And so they are really struggling. I think they just released their economic data, so the Purchasing Managers Index, and it surprised everyone and was actually a contraction for this month. So down at 49.6 instead of the expected 50.1, and 50 is the level where it stays the same, and anything above is growth and anything below is is a contraction, and so that suddenly is actually a really, really scary issue. And China is, as we know, the engine of global growth, and suddenly there's a whole host of issues mounting up. They've cracked down on the tech and education sectors. They are punishing billionaires. They are punishing property companies, and we've all heard about Evergrande. And for some reason, that story, that was not a one-day story, but it got one day of coverage on Monday because markets were down. But I don't think it was because of that. I don't know if people saw the EXI that I wrote, but for the last 6 months, around the 19th or the 20th of every month is when options expire. And as we know, there's been an options mania, and the sort of the end of month rebalancing from options positions either being rolled over or closed out has been pretty wild in the last 6 months because of that mania, and probably because of the lack of experience. And so just there have been a few percent dips around the 19th or 20th of every month, and I think that's what was happening, slightly exaggerated by the Evergrande fears. But that is a story that is ongoing. There's contagion fears into the rest of the property market. The size of the property bubble in China is enormous, and now they're shutting down factories and they're unable to power their homes, and you can't have air conditioning lower than 26 degrees. And there's a lot of things going on in China, not to mention the human rights atrocities in Western China that is stopping a lot of investors from putting money in, and the potential for American sanctions against Chinese listed companies based on sort of lack of governance and accounting principles. And then just the general increasingly authoritarian nature of Xi's regime at the CCP, which is something that you and Boaz, I know, have spoken a lot about. And suddenly you realise that actually the country that has driven the post-2008 recovery, it's had growth of 6%, is responsible for something like a third of global growth in the last decade. And everywhere else, in the UK we go at 1 or 2% if we're lucky. In America, 1 or 2%, add a push. Dead inflation. China has been the driver of everything. It's had a huge influx of workers, bringing the cost of goods down, keeping inflation down. Maybe that's not going to happen, in the next decade, and that'll be an inflationary pressure as well. So it's just this incredibly significant thing where, there are, as in the opening episode of Chernobyl, there are just red buzzers and buttons going off wherever you look.
Yeah, China has some serious issues that I'm not sure they're going to fix in a hurry. The big question, does it spread outward from there to the wider market, which inevitably you'd think it must.
About March 2020, I think we said, it'll stay there. Yeah, we'll be fine.
Well, to be fair, I mean, Apple's not having any issues shifting new iPhones. So, I mean, there are issues with some manufacturers and there are not issues with others. And, I think the word crisis is going to get thrown around a lot in the next 3 months, because people love a crisis, and the mainstream media love people freaking out about crisis because it gets them coming back to see what's happening tomorrow in the crisis.
Hey Sam, should we call this episode Crisis, and then we just get clicks?
We should call it Podcast Crisis, just to see how many people click on viewing today's episode. But for me, I love a crisis because I see nothing but opportunity from these sorts of things as well. And like we said at the top, you just on the fuel crisis in the last week alone, there were some pretty tasty returns that you could have seen through the likes of Shell and BP. Of course, hindsight is a wonderful thing. Getting in front of these moves or these crises or these shortages is another. But it's something I know certainly you're looking at, and certainly something that I'm looking at. How to play it from the energy side of things, how to play it from the semiconductor side of things, how it expands and evolves if something like Evergrande does go down, albeit there's some complex Chinese political movements, I suppose, that will play out, that no one really knows how they work except for those that are involved in it. So how that ends up playing out is anyone's guess, really. What happens in China stays in China, it seems like. Certainly wouldn't want to live there at the moment, that's for sure. So you can sort of think yourself quite lucky, for most people, I would assume, watching this, that you don't live in China. Although it feels like sometimes our domestic and international neighbours are ever so much creeping towards that kind of authoritarian rule.
I'm sorry, Sam. I'm sorry about Australia. I want it on the public record that I'm sorry that that's what's happening there.
Yeah, well, I mean, look, there's issues politically everywhere.
The New World Order. It's very exciting.
There's also there's some interesting movements in the gold markets, which affects, a lot of the Aussie gold miners. The iron, obviously China with the property market really has hit some of the big iron ore players. Look at some of the big miners out there like Fortescue has been absolutely smashed over the last couple of months. Even BHP's taken a fair hit from it. Also, there's a lot of knock-on effects from these things that people need to consider and look at, and then also figure out what the short-term implications versus the long-term with these things and how they play out. I know, like you say, you guys are working hard at Exponential Energy Fortunes around, ways to play the energy markets that the investors can make a profit. And certainly at Frontier Tech Investor, I'm definitely looking at how, new technologies, things like blockchain technologies can assist with everything from energy to how we network and communicate with finance. In fact, people watching this may have seen recently, I've just put together a new broadcast that you should be able to see. There'll be a link somewhere, either in, around, above, beside, below, on an email that you'll get with this podcast that will step you through my latest research on that. Yeah, just start pointing somewhere on the screen. It'll be there.
It'll be below the video.
It's fascinating.
We don't have that capability
about how
here.
new technologies we can use so that, while the short term, we might see the word crises, as we say, thrown out a lot more around energy, around food, around China, around the global economy. There are good things happening in all those markets that the investors can get ahead of and certainly I think make a bit of coin from moving forward. So anyway, we've gone on far too long already in today's podcast. So much to talk about. That's what happens when you take a week off from doing this. But we'll be back again next week. Would you like to leave our viewers, listeners with any closing remarks on what's been kicking off in the last week, Kit?
Yeah, fuel inflation is transitory.
Transitory. I think Jerome Powell he's doubled down on that.
No, he's not doubled down. I don't think he has doubled down. I think he's done the opposite. If you look at the notes from his latest Fed meetings and talks from this week, he doesn't mention it. He doesn't really mention it at all, the transitory stuff. I think...
Well, he might not be saying transitory, but I guarantee he still believes that it's a blip on the radar. Or at least, maybe he doesn't believe it's a blip on the radar, but at least that's publicly what the message needs to be.
Yeah. There's reflexivity there, isn't it? They need it to be transitory, so they just got to keep saying it and hope that people believe them.
And of course, when it eventuates that it isn't, they'll just deny that they said it in the first place. But anyway, that's...
We're going to have a trade deal with America.
We might need their energy. Anyway, thanks for joining me again this week, Kit. It's been great. Enjoyed it very much this week. I hope everyone's enjoyed listening, watching us today. And we'll be back again next week with another episode of the Exponential Investor Podcast. We'll see you then.
If we've still got power in our microphones, we'll be here.
Bye for now.